Welcome back. This is Professor Marsh, and this is Unit 6, the last unit before the midterm exam in Principles of Financial Accounting, Accounting 210-0 at Newberry College in the spring of 2022. So welcome back. Unit 6 is a review unit, and it's also designed to provide a summary and a comprehensive review of the first 5 chapters in your book. You remember Chapter 1 was the role of accounting in society, what accountants do, why it's important, and certainly some ethical concerns when accountants go bad, whether because of intention or negligence or perhaps recklessness. It can create huge problems, as we saw in the Enron scandal that led to Sarbanes-Oxley, and as we've seen in many other financial scandals over the years. We've seen the heroic accountants, such as the one who was a forensic fraud examiner and was able to catch Bernie Madoff and to expose his Ponzi scheme. So that was Chapter 1 in Unit 1. Unit 2, Introduction to Financial Statements, we started to look at what are financial statements, what are the 4 basic financial statements, and you'll remember, of course, that that's the income statement, the statement of owner's equity, the balance sheet, and the statement of cash flows. Those are our 4 basic financial statements that are part of GAAP. And we looked at how they're constructed, what the statements do, and what they mean. And that was Chapter 2, and we're going to take a deeper dive into the actual construction of financial statements in Section 2.3 in this unit. We kind of glossed over it. We read it, but we really didn't do the exercises. Now that we've been through the entire accounting cycle in Chapters 1 through 5, we're going to go back and we're going to do some of those exercises, and hopefully at this point they'll be more meaningful to you because you've already done Chapters 3, 4, and 5 that show you how to analyze and record transactions, how to adjust them, and then how to close out the period, respectively. So we will also go deeper into the adjustment process, working to convert the trial balance into the adjusted trial balance with our typical adjusting entries. Why do we have adjusting entries? Because we're learning accrual accounting. And in accrual accounting, we just don't record the cash transactions. We also have to accrue other transactions in order to properly match revenues with expenses in the proper period. And then why do we do our closing entries? In Chapter 5, we'll look a little more at that and look at how to do financial statements after the closing entries with Section 5.4, and also look at Section 5.3 on the way there, just to review the classified balance sheet and just the elementary financial analysis of working capital and the current ratio. So that's what we have in store. We're going to use several lectures for Unit 6. This is designed also to help prepare you for your midterm examination, which will be at the end of this week. And so please get ready for that. I'm going to give you until 2 days before I have to submit my midterm grades for you, which I believe is March 23rd. I think that's a Wednesday. For your midterm exam, I'm going to give you until the 21st to submit it. But of course, those of you who want to have a happy spring break will submit it certainly by this Friday or this weekend. So I will be posting the midterm exam sometime tomorrow or Thursday. If you want to do it right away, that's great. If you're not going to do it right away, then you will have until Monday the 21st. And sadly, we'll be doing it over the last weekend of spring break. But in any event, it is an open book, open notes examination. I'm not trying to hide anything from you. I'm trying to teach you how to do this correctly. And so the homework and the quizzes were designed to help you learn from your mistakes. And I will be posting additional videos during the course of the next week reviewing. I know we've done some for Unit 2. I'll also be posting 3, 4, and 5. I know that your Chapter 5 homework was just due, or perhaps it's due today. But in any event, that's what you'll be getting for this particular unit. This unit will not have a quiz. This unit will not have specific homework other than to review the homework that you've already done for Units 1 through 5. And perhaps I'll give you a couple of exercises, but we won't grade them this time because the midterm exam is what we want to focus on. So anything that I give you as homework, I will also post the answers for when I post the homework. Do yourself a favor and try to do the homework without looking at the answers first. If you want to submit them, if you have any questions, please feel free to do so. Sadly, I will not have office hours this Friday. I know a lot of you will be taking off for spring break, and I will also have to be in the Charleston office this weekend. So I'm leaving on Thursday for that. But there will be several lectures posted for this last review unit before the midterm. So keep watching, and please tell your classmates to watch the videos. I still see on YouTube that many of you have not found the videos yet, and I think you would find the instruction helpful based on what I'm seeing in some of the exercises that we've done during the semester. So with Unit 6, there are, I guess, 4 learning objectives that I identified, and it's the learning objectives of Section 2.3, which is to prepare 3 of the 4 financial statements, everything except the statement of cash flows. Section 4.5, which is to prepare financial statements using the adjusted trial balance. Remember, in 2.3, we're going to use just the regular unadjusted trial balance. In 4.5, we're going to make those accrual adjusting entries to then prepare financial statements from the adjusted trial balance. We're going to look at, again, the classified balance sheet, and also computing working capital and the current ratio, and discussing liquidity. One of the great things about current assets and current liabilities is that they give you a preview of what's going to happen in the next period. So you go, after you close out the prior period and you see what your current ratio and your working capital is, it oftentimes will give you clues as to what, as a manager, as a business person, you need to focus on going forward. So if you have a very high current ratio, as you'll remember from Section 5.3, you may have to get those assets working a little harder and put them to work, or invest perhaps in expansion. If you've got too much cash, maybe you have to turn your inventory quicker. Maybe if part of your current ratio is you've got too much inventory, maybe you need to sell more. If a lot of your current ratio, if you've got a lot of receivables, maybe you need to go out and collect them. But if you do have too much cash, perhaps you need to find a way to grow the business, and perhaps work on improving your efficiency, or perhaps take distributions. Maybe it's time to take some distributions out. If you have a very low working capital balance and a very small current ratio, then perhaps you're really going to have to get to work as far as generating additional cash and additional working capital. Maybe you need to go get a loan. Maybe you need to refinance some of your short-term debt with a long-term loan. So those are all considerations that accountants help business people make. And if you were both the accountant and the business person, those are decisions you may have to make at some time. Okay, so the learning objectives for Section 2.3 are first looking at the 10 financial statement elements. And you'll remember that in 2.3 we had the example of Cheesy Chuck's business, and I'm going to go through some of that. But your 10 financial statement elements, you have the income statement elements of revenues and expenses, gains and losses, and then you have the balance sheet elements of assets, liabilities, equity, investment by owners, distributions to owners, which are often called dividends, and comprehensive income. And there are standard conventions for the order of preparing financial statements: the income statement, and then the statement of owner's equity, and then the balance sheet, and then the statement of cash flows. And the format of those statements, the three-line headings, the columnar structure of those statements are important as well as part of our tools and techniques of preparing them. We looked at the concept of financial ratios, which are calculated using financial statement information. They're beneficial to aid in financial decision making, and we just talked about the example of the current ratio and the working capital. But there are other ratios as well, and oftentimes debt equity ratios, a measure of financial stability. You can have ratios with respect to other aspects of the business. You can have growth ratios. How quickly is the business growing? How fast are revenues growing? How fast are expenses growing? How fast is profitability growing? And so those are all other financial ratios that are used in analysis that we will look at more as the semester goes along, and that you will look at more when you take classes in business finance. Liquidity ratios assess the firm's ability to convert assets into cash, and we looked at working capital and current ratio in 2.3, and then we took a deeper dive into it in 5.3. So in your book, and you should have your book open, in your book you're going to find, let me go ahead and get it open as well here on the computer. So I'm looking at section 2.3 in your materials. It's this particular chapter, and you've got the example of the baker who's making the donuts, and you've got the listing of those 10 financial statement elements that I was talking about. And then you get into the trial balance. You're presented with a trial balance for Cheesy Chuck's Classic Corn. And what you'll see is that you've got revenues of $85,000, and then you've got a listing of expenses, all the different items that go into the making of this special kind of popcorn that Cheesy Chuck makes and sells. And then after those expense categories, you have cash of $6,200, equipment of $12,500, accounts payable. Okay, so you've already had some transactions that had led to some accrual entries, wages payable of $1,200, investments by owner of $12,500, and then drawings back out of the business by the owner of $1,450. So this is a typical trial balance for a small business, and it looks like one that's just unincorporated. It's just sort of what we call in tax a Schedule C business. It's an individual proprietorship, a mom and pop type business that's not incorporated, not set up as a partnership or an LLC. It's got a very simple owner's equity account. And so looking at the income statement, just pulling out the income statement accounts, you see the example of, and again, this is unadjusted, and before any closing entries, this is the unadjusted income statement for the month ending June 30th, 2018. So one of the elements of good financial statement preparation uh, is to actually have that 3-line heading at the top of the financial statement. And sadly, my printer cut it off, but you can see that the first line is Cheesy Chuck's Classic Corn, and then the second line is the statement, and it's the income statement, and then the third line is the period involved. And since it's an income statement, it is for a period of time as opposed to being as of a certain date. So in this case, this is the income statement just for the month of that ends, well, it's July 2018, and so we typically will put for the month ending, June 30th, 2018. So it's for the month of June, not July. And so that is how we typically begin the financial statement. And you can see the revenues and expenses, and those were pulled right from the trial balance. Then you can see that, wait, we've got something here. We've got revenues that exceed expenses, so we're going to use this in our statement of owner's equity. So the first statement that we prepare, the income statement, gives us what the net income is, and then we transfer that to the statement of owner's equity. And so you'll see that a little bit later in the chapter. And after all of this verbiage, and let's see, that'll be 4. So here's the statement of owner's equity, and you'll see the statement of owner's equity is based on an equation, and you can see that equation right up here. You've got beginning balance, and this is a new business, so it looks like June of 2018 was their first month, and then an investment of $12,500, and then earnings that we saw in the previous statement of $5,800, and then distributions or drawings by the owner of $1,450, and that gives you an ending capital account for Chuck of $16,850. And so you see the equation to calculate ending owner's equity for that particular period, and then you also see the underneath the equation how it's actually presented in that statement. And so this is a very simple example of a statement of owner's equity. And note, just like every other financial statement, it starts with the name of the entity, and then what the statement is, and then the period or time that it is for or at. And so that's that. And then this number that we get down here, the capital ending owner's equity, that's what capital means, owner's equity. That ending owner's equity is going to be used as it says in the balance sheet. So then we're going to go down to the balance sheet. And in the balance sheet, we have a mess because it's also cut off at the bottom of the page. So I'm going to ask you to look at it, but it kind of looks like this, except there's a line missing the way the page break took place when I was printing it. But in any event, that is, let's see, page 4 and page 5 together. You can see the balance sheet. And so I'll just kind of talk through it. You can look at it in your book as I talk, because you can listen to this and actually read the chapter at the same time. So I'm looking at Cheesy Chuck's Classic Corn balance sheet as of June 30th, 2018. And what you can see here is if you go back to the trial balance, you'll see that we took the asset and liability and equity accounts off of, well, actually the assets and liability accounts, we took those off of the trial balance, and then we took the owner's equity from the statement of owner's equity. And so that's how we put the balance sheet together. And as you can see, it's all in balance. Assets equal liabilities plus owner's equity. So the total assets are $18,700. The liabilities are $1,850. Owner's equity is $16,850, and you add the $1,850 and the $16,850 together, and you get $18,700. And so that's our basic accounting equation: assets equal liabilities plus owner's equity. And that's a nice example of the preparation of those three basic financial statements. And this is unadjusted numbers. This is before we do our adjusting entries, but this is how it looks. And so the book then takes you through a review of all this. It takes you back to the account balances, and you can see them right there. These account balances, as we know now, represent the various T accounts that we've been keeping for all of our different categories of revenues, expenses, and other, the income statement accounts, and then also the balance sheet accounts. And so we keep those T accounts. We prepare a trial balance. Hopefully the trial balance balances. Remember, we talked about how to do the troubleshooting, and how to go ahead and to make corrections if our balances don't balance. We said first, calculate the difference between your total debits and your total credits, and look for a number that equals that difference, and if there is one that equals that difference in your T accounts, or perhaps in the balances at the bottom of the T accounts, you've forgotten something, then divide the difference by 2. And if you divide the difference by 2, maybe look for that number in your various journal entries and T accounts, and maybe you've put a debit that should be a credit, or a credit that should be a debit, and then divide the difference by 9, and that's your third technique. And if you divide it by 9, if you find an entry that looks like it's divisible equal by 9, then you may have a transposition, that you may have transposed a number. Instead of putting down 45, you may have put down 54, and so the difference is 9. Or maybe instead of 180, you have 8100, and so the difference in that is 63. Or instead of 180, you've got 810, so the difference is 630. That's divisible by 9. So that sort of thing. So that's the sort of thing that you're looking for as far as troubleshooting to get to a correct trial balance that actually balances. And then once you have the trial balance, you can prepare these unadjusted financial statements, and it takes you back through all of the financial statements, and you can see how they look as they repeat the process through figure 2-13. So that's the first part of this review unit, the preparation of these financial statements. And then there are some examples that you see, and they do have a little discussion of working capital and current ratio, and they talk about the international financial statements. But the point of this particular section is that now that you've had the experience of analyzing and journaling and setting up T accounts in Chapter 3, now hopefully these financial statements make more sense. So you do the work in journaling and doing the proper T accounts in your ledgers in order to get the information that you're going to use to prepare the trial balance, and then also to take the trial balance and to prepare these financial statements. The income statement, what does the income statement do? Well, the income statement gives you a review of how well the operations of the business are going for the period that you're looking at. What does the statement of owner's equity do? Well, it tells you, how much the net worth of the company is increasing or decreasing during that particular period, based on its operations, and also based on financing activities, if it sells shares or sells an interest in the business to raise capital, and how much it decreases because of distributions out to the owners. And what does the balance sheet do? Well, it gives you a little snapshot of the financial health both in terms of financial strength, the debt versus equity, and also in terms of liquidity, as far as current assets versus current liabilities and that sort of thing. So those are our basic financial statements, and I hope at this point you feel comfortable with the basic accounting equation, and at least with these first three of our basic financial statements. So with that, I'm going to say goodbye for right now. Good luck as you study for the midterm, and I'll be back with a discussion of our next learning objective for Unit 6. For Unit 6, which is going to be Chapter 4, Section 4.5, when we look at the adjusted trial balance, and I guess getting from the trial balance to the adjusted trial balance, and then looking at financial statements that are constructed from the adjusted trial balance. So a little more complexity in the next unit, but I'm sure you're ready for it. So again, good luck, and we'll talk to you again soon. Bye-bye.